It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
They have car stackers and the buyers do not want car stackers. So if anything about your property is not appealing to the buyers, they will move on because there's always another property that they can look at, that they can buy.
And that is Wendy in Melbourne this morning on the Real Estate Breakfast as we launch into another episode with more property information. We connect you to the largest real estate podcast library across Australia every morning, 7 days a week, and we are streaming right now on iHeartRadio, Spotify, as well as Apple Podcasts. Now, how did we get back to another Friday? This working week has just gone by so quickly. So is June, for that matter. We're up to June the 20th. July is going to be knocking on our back doorstep. Now, good morning if you are in Brisbane. Brisbane's real estate market at the moment tells a different story when comparing Australia's surge in old listings. Despite an uptick in May, Brisbane has actually seen a 9.1% year-on-year drop. And that is indicating strong underlying demand and faster market turnover. Now, while unrealistic seller expectations, they do persist, Brisbane buyers are returning as interest rate clarity emerges. And we're hearing this from a lot of different agents in Brisbane. With homes moving more quickly than in Sydney or Melbourne, Brisbane looks poised to outperform, offering confidence for sellers who price wisely. And that is the point. It is all about pricing wisely at the moment. It's something we are going to talk about coming up right now with Wendy Chamberlain, who is a buyer's agent there in Melbourne. And good morning to you, Wendy. Welcome to the Real Estate Breakfast. You were telling me that you've been in real estate for almost 30 years. Wow.
That is correct, Craig. It's a long time when you say it out loud like that.
The other thing too with that is that you are a buyer's agent. You got to be one of the oldest buyer's agent because you've never actually worked as a selling agent.
That is correct. I've never worked at a real estate selling agency. It is all through personal experience through our own buying and selling of properties.
So how did you sort of decide 30 years ago to become a buyer's agent?
Well, I've always loved real estate and I have an absolute passion for it. And my background is actually corporate IT, but I just realised that I wanted to be involved in the real estate space. So it just came about that way and I set my sights on buying real estate and here we are.
Yes, you must marvel when you go back 30 years. Obviously, no social media. I mean, the cell phones were around, I think, maybe 30 years ago, but not too many. Maybe they were those big suitcase phones. But, I mean, what a big change in 30 years.
Big change in technology in 30 years and also a big change in different markets because every single market is always different. They're never the same. And it was paper-based back then. It wasn't electronic. The whole industry has changed now. Things were actually done on paper. And when you were buying real estate, you had to sign 5 separate paper contracts. It took a little while.
And is that something that sort of makes it interesting, like, you know, moving with the times and keeping up with the tech and sort of still sort of remaining relevant?
I think that it's one of the most important things is to stay up to date with everything. But also, as I said, all markets are different and you really need to live and breathe a market to understand exactly what is going on, to be able to buy well and make sure you're not making any mistakes. Making mistakes in real estate can be expensive.
I was working in radio 30 years ago, and if somebody had told me 30 years on, I would be talking about real estate on a podcast, first question would have been, what's a podcast? And are you serious talking about real estate all day, every day? But here we are.
That's interesting because the different names and terminology of things, because we used to have teleseminars. We used to jump onto teleseminars and podcasts were just, you'd go, well, what is a podcast? I don't even know what that is. Things are constantly and continue to evolve. And just with your real estate and understanding what a market is doing, you need to evolve with the time.
Yeah, well, we definitely are evolving, no doubt about that, with nearly 1,300 episodes. Now, let's look at the old listings that are piling up across Australia. Melbourne's market dynamics reveal some unique pressure points from SQM research. It does show a 6.2% monthly rise in listings. That is over 180 days, driven by over-ambitious sellers hanging on to inflated prices. How much of that problem are you seeing with these vendors just trying to, get that top dollar that has probably passed them by?
Well, I have a saying that I say to people, it's funny. So when we're working with a first-time buyer, they want the prices to drop. But as soon as you buy a house, you want prices going up. So you're dealing with people that own real estate, the vendors, and obviously they're wanting to get as much money as possible. Unfortunately for them, it depends on the market forces at any given time. If the market is not letting them know that is where the value of the property is, the problem that they're facing, which is why we're sometimes seeing such long times that properties are on the market, is they're not actually being realistic about the prices. Part of the reason why a property may languish on the market for longer is it takes time for the vendor to get their head around the fact that they're not going to get the price, their dream price that they thought they would get. It can take a number of weeks. By the time they understand that and realise, yes, they need to make a price correction, which generally is a price reduction, the buyers that were at that point in time interested in their property have moved on, and they are in effect starting their campaign right from the beginning again and having to source and find a whole new set of buyers, because those ones have gone. They've gone and bought something else. That is part of the reason why there is such a delay when there is this disconnect between what the value of the property is and what the vendor thinks it is worth.
We are talking to Wendy, a buyer's agent there in Melbourne. When we come back, we'll find out what the investors are doing. We'll do that next.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week. Every week, unravel the real estate market to help guide your real estate journey.
It is a Real Estate Friday. We are talking to Wendy there in Melbourne. Wendy, let's have a look at those investors with poorly maintained apartments who are struggling to find buyers, while those failing to adjust expectations, they really can stall the sales process for months and months and months. So it's a bit of a tricky one for investors at the moment.
It absolutely is, because what we're seeing at the moment is there's a cost of living crisis, and coupled in with that is the cost of materials, trades, and getting any works or renovations done. And many investment properties have not been necessarily maintained to a standard that a buyer is happy just to pay you the money and take the keys and start living there. And that is what we're seeing. So when a property is poorly maintained, the investor, in order to get the price that they're wanting, is going to have to invest money in the property. Now, they may not wish to do that. They may not have the money to do that. They may not have the patience. They just may want to get rid of the property and sell it. But again, where it's not a desirable product to the buyer because it doesn't meet that need, with what we've seen over the past few years with the cost of building and materials, lots of buyers that we work with and just in the market, what we're seeing as a trend is if a property is turnkey, it's ready to go, it's renovated, those are the ones that always do well. It's the properties that may need a little bit of work, they need a renovation, that when somebody inspects it as a buyer, they take pause and they go, am I prepared to put extra money into this because it's extra time, stress? I don't know if you've ever, Craig, been in a house when it's getting renovated, but there's a lot of dust and you get very sick of it very quickly. It wears thin very, very quickly. So that is a factor for investors when they're looking to sell. If the property is not in a palatable state for the buyers, it's going to be considered to be less desirable. And those are the homes that can take longer to sell.
Probably those people that have got a higher threshold for the renos are the ones that don't have children. If you've got the children into the mix, that can be an added problem. Now, let's just get back to the Melbourne sellers. This whole adapting their mindset for the pricing and the presentation on strategy. often hear when people are selling, I don't want to spend too much money on the strategy advertising side of it because, look, we're in a market, everything is moving anyway, so I don't need to do that. Then they find out that they've got those costly delays. So that's the first point. The other point that I'll get you to talk about off the back of that are the different types of properties that are being sold at the moment.
It all comes down to price. So where a buyer is not seeing the value, they're not going to step forward and pay that. Different types of properties will appeal to different types of buyers and different price points associated with that, obviously. End of the day, it comes down to where the buyers are seeing the value of the property in any given market. And that's where this disconnect can happen. And what we have seen, certainly here in Melbourne over the last 4 to 5 years, from around 2020, the prices absolutely took off and then they've come off and then now things are starting to pick up again. What sellers who purchased through those years are going to find, if they need to sell their property, they may not necessarily be recouping their costs, things like the taxes and the stamp duties. Real estate is a very forgiving asset class over time, but what you will find if you need or want to sell your property earlier than having recovered those costs, you're just not going to get them back. And where you have vendors hanging on to a certain price that they want to achieve to be getting money back versus where a market is sitting, that's where they're going to run into trouble, and that's where we're seeing properties stay on the market for longer.
And what about those different types of properties at the moment that are being sold?
So we are seeing a lot of apartments being sold at the moment here in Melbourne. It's a lot of investor stock due to various government policies and the vendors just deciding to sell. Where the property doesn't match the requirements of what the buyer is looking for, then those properties are going to stay on the market for longer, particularly apartments. Apartments at the moment, there's a lot of them around that are being sold off by investors because of land tax and other expenses at the moment, where they have things like high owners corporation fees. They're on the smaller side because banks won't lend on certain apartment sizes under 40 square metres, and particularly things like amenities such as a car stacker. So many buyers do not want to have a car stacker because it doesn't suit their vehicles, and if they break down, you've got months where you actually can't even use your car park. And these factors, certainly with recent builds, a lot of apartment blocks are I don't know why exactly, but they have car stackers, and the buyers do not want car stackers. So if anything about your property is not appealing to the buyers, they will move on because there's always another property that they can look at, that they can buy.
All right, well, thank you for all that information coming out of Melbourne from a buyer's agent's point of view. You've been doing it a long time there, Wendy, and thanks for coming on to the Real Estate Breakfast.
Thanks, Craig. Always a pleasure.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us.
This is very close to Camden. Not everybody probably have heard of this suburb. Just tell people a little bit about where it is, etc., and why it has sort of grown.
So Camden itself has been here for a long time. It's at the end of Camden Valley Way, so Camden Valley Way starts all the way up near close to Liverpool area, coming down through the southwest. What we have now between Liverpool and Camden is a lot of development that's happened on either side, which used to be once farmlands.
It's got that median house price $995, so nearly at $1 million, Antoinette.
Yeah, there's a lot of newer homes in the Camden LGA which have been just recently built. Currans Hill, obviously one of the more original suburbs of the Camden LGA. We've got larger blocks of land, suburbs like Mount Annan, which are close by as well. So suburbs like Currans Hill and Mount Annan, I feel have got great homes on great blocks of land.
We connect you to the best real estate information across Australia. The Real Estate Podcast.